This is Eat, Sleep, Invest, the marketing podcast for real estate investors to get more deals. Hey, welcome back, everyone, to another episode of Eat, Sleep, and Invest. I'm your host, Brian Driscoll, and I'm here with Jamie Lane. What's going on, Jamie?
Hey, thanks for having me. Ready to dig into short-term rentals.
That's cool. Yeah, I'm excited to dig into data. Like, Jamie, you're the data guy, right?
Yeah.
All right, cool. So give everyone a little bit of background on like what you do and how you got into it.
Yeah, so I actually came from the commercial real estate side. So worked for a hospitality research company for about 8 years. Then our company was acquired by CBRE, and I was the senior director of economics and forecasting for CBRE Econometric Advisors, overseeing a team of economists covering all aspects of commercial real estate, and then sort of missed the hospitality aspect, missed travel trends, and so joined AirDNA in October 2020, and have been digging into the short-term rental ecosystem and really trying to help our company and really the industry accelerate our data quality and the insights that we can use to leverage that data for investments.
Yeah, AirDNA is pretty much the place for the Airbnb data. Like, you guys have been around a long time, and you guys have direct integrations with Airbnb and stuff, don't you?
Yeah, so we have been around since 2014. So for what I do, having a nice long time series of data, so 8 years of historical performance is super helpful in understanding and the trends today and how they relate to prior years. We collect all of our data through scraping of Airbnb and Vrbo and Booking.com, but also have direct integrations with hosts that list on the major platforms and getting that data directly from them.
Okay, and then so what this means for investors, because I was checking your software out, and I was actually looking in my neighborhood. So I'm an investor myself. Yep. I do long-term rentals, and I'm in the suburbs. And I always wondered on the Airbnbs, it's like, who's going to rent out here? And I looked up, there's 2 properties in my zip code that are renting with an 80% occupancy, and they're making like 50 grand income in a year versus monthly rents are like $1,300 a month. So that kind of data, like you can't find that data anywhere else.
Right. So we're tracking roughly 12 million listings around the world. We're estimating the daily occupancy and ADR of each of those listings. So looking at calendar movement, so what days are available in the calendars, when do they go unavailable, what rates they're available for, and the revenue associated with every single one of those bookings. We then have that sort of in our database, and then we've created tools like Rentalizer, which is probably the one that you were looking at, where you can input any address in the world, and we're going to go out and find comparable properties. So being in the long-term rentals, I'm sure you're comfortable with comps. Like, right. You got to find relevant comps. So Rentalizer is our tool for finding those relevant comps. So we're going to go out and look for properties that are similar bedroom, bathroom counts, nearby your location, similar price tiers. So is it a luxury home? So we're going to go out and find luxury comps, or is it a budget home, the like? And then bring back what we see those properties earning on an annualized basis, and show those. And that is by far our most popular tool. We get tens of thousands of searches every day of people looking to, let's say they're looking to buy a home, they've got an existing home, they've got an existing long-term rental, and are thinking about bringing into the short-term rental ecosystem, and we can help them get comfortable with what that earning potential is.
Yeah. So what are you seeing in this market? Like, it's kind of crazy right now with ups and downs.
Yeah, it's been so in the commercial real estate sector, we looked at cycles, and like the average cycle was like 10 years, right? And where you'd see the peaks, the valleys. For short-term rentals, we have seen an entire cycle in a 3-year period, where we just saw a complete collapse of demand in March 2020 with the onset of COVID. Occupancies reached all-time lows. It was dark days in March and April and May when we just didn't know what was going to happen. Travel sort of came to a stop. But then really quickly, people started to get out again, and they wanted to travel. They weren't necessarily willing to stay in a hotel, so they looked to short-term rentals. And we saw demand sort of come back really strongly, and mountain, coastal, sort of rural destinations. All the while, supply just almost entirely left. If you had a second home, you could work remote from that second home. And we saw supply in the cities, a lot of short-term rentals convert back to long-term rentals. So supply, about 30-40% of supply of short-term rentals in the U.S. just disappeared overnight. We have now exceeded that supply, but well exceeded it in terms of demand. And occupancies hit record highs in 2021. They've come down a bit as more supply has been coming on, and we saw about 25% supply growth as an industry in the U.S. in 2022. And that has pulled occupancies down a bit, but we're still much higher than we were at pre-COVID levels.
Yeah, now, and that 25% is crazy in 1 year. That's a big number.
And in some markets, like you look at a market like Dallas or Houston, supply is up 50% year over year.
Yeah, and that's crazy too, because then, you're trying to rent. There aren't enough people. Yeah, the occupancy rate's going to go down.
Yeah, and that's the occupancy levels in 2021, they were magnitudes higher because demand had come back, supply hadn't come back yet, so there was so much scarcity. People are able to raise rates. They were just seeing record returns for this sector. And that created a lot of people that were maybe interested in doing short-term rentals for the first time. And that's led to a lot of new people coming in, a lot of supply coming in. And I would say it's more a reversion back to more normal return expectations that we're seeing today. We are seeing some people getting hurt by that. So if you underwrote in 2021, expecting those levels to sort of maintain forever, you're now maybe a bit disappointed in how the industry's performed since then.
Yeah, and I think that might be industry-wide too. Like even flippers, I know a lot of them were underwriting also for the higher values, and they get stock. Same on this. Yeah, if you don't, you always got to be conservative. Because what goes up comes down usually.
Yeah, and that's where having the long time series of data really helps. So those Rentalizer estimates we were talking about, those essentially are assuming past year's performance. But that's where you might want to go in and all right, the occupancy level that AirDNA told me for this unit today is going to earn, let's say, 60%. But then if I look back through time, my market's still generating 10% higher occupancies than it was in 2018, 2019. Maybe I should underwrite some downside risk there, or at least make sure that the deal still works if occupancies dropped another 10%.
Right. So, and that brings up a question I have for you. So what are, say, like the top 2 or 3 problems that investors are trying to solve when they come to your site? Like, 'cause you have all the data, what are the top couple things they're trying to find out?
Yeah. One is annual earning potential. And that tool is by far most popular. The second is understanding the seasonality of their market, how they should then, once they have that listing, how are cash flows going to play out throughout the year. So unlike long-term rentals where you have a very consistent cash flow coming in every month, short-term rentals are going to be entirely different, where you're going to have a high season, a low season. And let's say you're buying a listing at the start of the high season, and you have it coming in, it's just cash flowing every month. You're like, I made the best decision ever. Then once you get to November and everyone starts traveling, you've got to have the sort of reserve saved up so you can cover your expenses through the slow season. So I'm understanding how to budget for that property throughout the entire year on what the revenues are going to be. And then also on pricing. So we provide pricing tools that allow people to take all the data that we have, and we distill it into what you should be pricing your unit at every night so you can maximize your overall revenue. Because demand trends are really dynamic. You might have a event coming into your city that you never even knew about, that is going to bring in travelers. And we're going to be able to pick that up. We're going to be able to see the bookings start to be coming in and say, hey, it looks like there's something coming into this market. Demand, and people have started booking. You need to raise your rate for this weekend, and we can do all that automatically for you.
That's cool. So what? Someone will put in their property address, and then you'll notify them, or can you actually fluctuate and integrate there with their posting?
Yeah, we can actually integrate with their posting, where you can link your Airbnb calendar with our site, and then we're going to manage those rates. You could do it on autopilot. I wouldn't necessarily suggest it, but you can, and a lot of people do. And we'll adjust those rates on a regular basis, on a daily basis, based on how those demand trends are moving in real time.
Yeah, I never thought about that too, because you're right. Like even here in Pittsburgh, like if we have a football game, rates are probably going to go up because everyone's traveling to the city, and especially like Vegas, places like that have conventions. There's no way a normal person can keep an eye on everything going on all the time and be able to do that.
Yeah, there's a whole bunch of strategies to sort of implement on revenue management of starting your rates out really high in advance of sort of your high season, whether it's on weekends with football games or summer with more leisure travelers coming in. And then as you get closer to that date, you sort of start dropping the price if you haven't gotten any bookings yet. But if you've got a great unit with strong reviews, and people want to book those units first, and you can price it significantly higher 6 months out. And then if you don't get a booking yet for those nights that are still available, start dropping it down. And then on the opposite side, a lot of times for last minute bookers, there's not a lot of availability still out there. And there's always going to be people, especially in cities, booking 1 to 2 weeks out. And that's when you could start potentially raising your rates again and getting those last minute bookings.
Yeah, that's cool. And yeah, I'm even thinking too, because I'm in Pittsburgh, like I said, and in the wintertime, it would be the down season, but then you have Seven Springs, it's an hour away, which is a ski resort, and it has high season. So if you're buying one of those properties in the different areas on the budgeting, it's not like a long-term rental like you're talking. Like you need to know, okay, the ski season is going to crush it from, say, November to February. Save that money because you might be dry in the summer.
Yeah, and one of the new strategies a lot of people are working with too is the combination of short-term rentals and mid-term rentals. So prioritizing short-term rentals during high season, where you can get people willing and able to pay a really high nightly rate during those periods. But then maybe in the winter, you want to rent out to a traveling nurse or a doctor of residency or students there for an internship. Something like that, where you could get someone renting for 2 or 3 months, maybe at a slightly lower rate, but essentially book out your unit full time during those off-season periods.
Yeah, and that makes sense. Yeah, because you're right. Money's in the data. Like if you know if you can kind of look and see based on the past what possibly is going to happen in the future, it could be big money there. Just doubling your rates on certain times and not, you know what I mean?
Yeah, and that's what a lot of the data that we can show you is in those prior periods, how far in advance are people booking? And what are the length of stays that they're wanting to book during those periods? So you can create that strategy to make your unit attractive to the people that are actually going to want to book during that period.
Yeah, and I was checking it out too. I had some things written down here. Like I thought it was interesting. So if I'm looking at a property as an investor, say where I live, you have average revenue by bedrooms, and you have the actual trends. So I can look, okay, based on whatever the property costs, do I want a 4-bedroom or do I want a 5-bedroom or 3, and look at the revenue and figure out what works there versus like obviously occupancy rate. You even have property managers listed in the software, right?
Yeah. So we have mapped every single major property manager out there and where they have listings. So let's say you make an investment in a market that you're not in. Then you want to hire an outside property manager to manage that listing for you. There's some national players out there, but some of the best operators are on a localized basis. So we're going to show you actually who's in every city around the world, who's actually managing properties, really anyone above 15 listings. So you could find the right operator for you if you're looking for a more passive investment and have someone deal with the day-to-day for you. Because unlike long-term rentals, like short-term rentals, it's really the hospitality business. You got people checking in, checking out every day. There's guest questions. There's the revenue management aspect. It is a lot more, I would say, operationally intensive than maybe a traditional long-term rental.
That's what's always scared me from
it. And then on the sort of different bedroom types and all the detail we provide, that can really let you find the pockets of opportunity. So let's say you know a market really well and what the long-term rental rates are, what properties are selling for, and maybe there's very little difference on what you're going to buy a 3 or 4-bedroom home for. Like that incremental 1+ bedroom on a long-term rental basis may for argument purposes, may not make a big difference. And then you go into the short-term rental data, look at our data set, and like, oh, for that 4th bedroom for a short-term rental, I can get $50, $60 more on an average daily rate for attracting larger groups. So if I'm sort of deciding whether I'm going to go into that market and purchase a 3 or 4 bedroom, that can make that deciding factor for you of, all right, I need to go in and find that 4-bedroom property because I'm going to get outsized revenue return from acquiring that.
Yeah, and that's so important too, because the deal's when you buy. Like when you purchase, that's when that's the most important part of getting the deal. I saw here too, I've written down amenities. That's huge too, because it's like you can look at what all the different amenities your competition has and make sure you're at least there or above.
Yeah, and in a lot of markets, there's the table stakes amenities. So I'm in Atlanta right now, and North Georgia, Blue Ridge is a really popular market to vacation at. 2-hour drive, like very easy to get to for a long weekend. And like 80% of the homes have hot tubs in that market. So if you're going to get a short-term rental in that market and try to rent it out and it doesn't have a hot tub, like you're not going to get the bookings that you'd expect. So if the house you out does not have that amenity, you're going to have to invest in that amenity. But also that's not necessarily going to be something that differentiates you. So you can sort of dig into what are the amenities I could add to my property that would actually differentiate me and get more bookings than my competitors. But also, what are just the base things that I'm going to have just to make sure that I can compete? And then what would then be over and above that?
Yeah. Now, what do you see? What are you guys predicting on Airbnb rates and travel here in the future? Like, what's your data saying?
Yeah. So we are in an excellent demand picture. So if you think like trying to fill up the units with people, during COVID, travel disappeared, right? People did not want to travel. A lot of people lost their jobs. Incomes dropped. We're sort of on the opposite end of the spectrum now today. Unemployment at record lows. Job growth, we saw over 500,000 jobs created last month. If people have a job, they will travel, and we are seeing that. Demand was up 20% last year. In the first month of January, we saw 17% more bookings in January 2023 than in January 2022. We really are seeing record levels of demand, more people wanting to travel, more people want to spend money on experiences and getting out doing things with their friends and family. They're sort of moving their sort of share of wallet where maybe they were buying on things and sort of you're getting the Amazon boxes sort of piling up on your front doorstep. They're sort of shifting that spend towards travel. And short-term rentals are benefiting greatly from that. So the demand picture looks great. As I said, supply is coming in slightly higher than that. So occupancies are coming down. with more competition for those guests, we are seeing prices come down, or at least not grow as much as we had been seeing. Average rates are up about 3% right now, where last year we were seeing average rates up about 10%. So our forecast for full year 2023 is for rates to be up about 1.5%, which is going to be probably below the rate of inflation. Occupancies are going to be coming down a bit, so the average host is more than likely going to be learning slightly less revenue than they were in 2022. But that's almost all because of all the increased competition. So it's going to be really important to know the market, get a sense of how much supply has come in, how much supply is expected to come in further, and what impact that would have on your revenues for new investors looking at this property type.
Yeah, and that's interesting too, because like with that kind of data, you can look, and if you're in a neighborhood that doesn't have a hot tub, like you were talking, you can go spend $5,000 and maybe you get all those extra bookings. Like if the neighbors don't have that, you can see what the competition has and try to make that your property stand out and get your occupancy rates up and make more money just because you have a place that you can go find out what everyone else is doing.
Yeah, and that's actually my favorite page on our website. We have this thing called Top Properties. And so for any city, you can look like, all right, what are the top 3-bedroom properties in this city? What are they earning? And then most importantly, what are they doing that's causing them to earn this? And at the basic level, all you have to do is go copy that. Because if these are the top 10 properties and they're earning 90% more revenue than everyone else, like just go and copy them. Or, this is a strategy I see playing out really well for some investors. They'll look at markets that are super popular, like at Gatlinburg, and find the top properties there. Because to be a top property in Gatlinburg, you've got to, you're competing with a lot of different units. And then let's say maybe you're going and now operating in like the Shenandoah Valley. Maybe not as popular in Gatlinburg, but I'm going to take what's doing really well in Gatlinburg and try to replicate it in this other destination and beat out the competition that way.
Yeah, that's smart. That is smart too. Yeah, you're right. You don't have to look at your specific area. Look at the top ones. That's a good point. So, okay, so who, like on your client base, or who's the best fit and uses your software? Like who do you see as a good avatar?
Yeah, so our sort of core avatar is someone with really 0 to 10 listings. So let's say someone that hasn't gotten into the space, wants to make their first investment, and they're trying to figure out what areas make most sense. And a lot of times they know the area. And they're like, I've been going to Blue Ridge every summer for my entire life. I want to get a home there. I want to be able to offset those expenses by having a short-term rental, and I need to know what that's going to earn. And then they make that first investment. They see it going well, and then they want to expand that. And then they're saying, all right, I don't want to do Blue Ridge again. I did that because of the convenience, because I know the market. Now I want to find the best places to invest purely on an investment side. So people that are willing to dive in to home values, understand the market, dig into our data, understand what are the earning potentials for different types of homes in different types of cities, and then grow their portfolio that way is our perfect sort of client there.
Okay, what's the average cost?
So depending on the size of the city, our full platform is going to cost anywhere from $50 to $100 a month.
Okay, so that's really cheap too.
Yeah. And then as part of that also includes the dynamic pricing. So let's say you buy and are looking to expand in Blue Ridge, and you can then price all your units in that market with that same sort of $100 subscription. So it doesn't scale based on the number of properties you have. How it does scale is the more markets you add, or you can get subscriptions for entire states or the entire U.S. Or really any country globally. And those, if you get up to the entire country, it's going to, I think it's like $500 or $600 a month.
Yeah, that's still not even that bad. And the cost, like you're saying, it does the dynamic pricing. I mean, if it gets you an extra $50 2 nights in a row, it pays for your subscription.
100%.
So if somebody wants to check you guys out, where's the best place to go?
Yeah, go to our website, AirDNA.co. We have a blog there. I write regularly for that blog, sort of giving people all the latest trends. We put out a report every month on what's happening in the short-term rental industry, so you can sort of stay up to date on what's happening in the market. We also have our own podcast called the STR Data Lab, where we talk through sort of broadly the trends that we're seeing in the sector, sort of let you stay up to date within that. And there, on our website too, you can subscribe, enter in any city in the world. We have a freemium version where all you have to do is create an account, and you can start diving into the data.
Yeah, very cool. And then if someone wants to watch a podcast, say that again.
Our podcast is the STR, Short-Term Rental Data Lab. So me and my co-host, our VP of Marketing, Mariah Kamei, and it's a weekly show where we dive into the data. So it's definitely a podcast for the data nerds out there.
All right, excellent. And then airdna.co. We'll put that in the show notes too, in case anyone wants to check it out. Hey, Jamie, what's your favorite book?
Favorite book, 4-Hour Work Week.
Okay, yeah, Tim Ferriss. That's a good one.
Yeah.
Yep. Cool, man. Hey, I appreciate you coming on.
Thank you. Yeah. Thanks for having me. It was a lot of fun.
Yeah, good stuff. Yeah, thanks everyone for listening. We're about out of time, but until next time, get out there, crush it, close some deals. Hey, we'll see you, Jamie.